Welcome back to the channel. We're going to be digging into a bit of education today, talking about how to trade trend reversals. So before we get into this, I would recommend, if you haven't already, go over to my page. I'll put a link somewhere on the video now, and go and watch the How to Trade with the Trend video. Now that video is going to get you to grips with the components of a trend, how a trend works, and how you can actually trade in line with a trend. This is a bit of a follow-up video where we're going to be talking about the flip side of that and how to trade the end of a trend and the start of a new one. So how to trade that area where we go from an uptrend to a downtrend, or a downtrend to an uptrend, essentially a trend reversal. So reversals bring great opportunities, but a lot of people trade them wrong. Many people will enter too early, trying to catch the top of a market without confirmation, and this doesn't work a lot of the time. That is why I made that previous video and spoke about how it's so important and why it's so important to actually learn to trade in line with the overall trend. Now, when trends come to an end though, there's also opportunity there, and sometimes greater opportunity than trend following trades. So once you've got to grips with that previous video and learned how to actually trade with a trend, the components of a trend and how it all works, you can move on to this one. And now we're going to talk about how to actually catch reversals and successfully trade a reversal in the trend direction. So there are a few key considerations that must be clear to actually take a valid trend reversal trade. These key components, the top two, are structure. This is by far the most important, and this is where people go wrong. And also the location of the structure that's forming, and the location of where the market is right now. After that, when you've got both of those things together, the actual reversal, so the candlestick pattern or the formation that's actually forming the reversal, is also super important. Now, what I've got here on the chart is an example of a trend reversal. We spoke in the previous video about trends and how a trend runs like this. So I'll just do a quick recap. That is your average trend, okay? We have impulsive moves, which are these larger moves up. We then have corrective moves, which are the smaller moves against the trend that essentially form pullbacks, okay? A little bit of breathing space in the market. So a trend is comprised of impulses and corrections, impulses and corrections, impulses, and a trend reversal can be found when the corrective move actually becomes the impulsive move by clearing out the low, okay? So in a trend, we have, for this example, we'll look at uptrends, higher highs and higher lows. Now, for a full breakdown of all this, please go to that previous video as mentioned. If you are already familiar with it though, that is completely fine. So in a trend, we have higher highs and higher lows. And while the market makes higher highs and higher lows, it's in an uptrend, okay? But it's when the market actually clears one of those higher lows and turns into a lower low, so clears the low and forms a low that's actually lower than the previous one, that is when we then shift into a downtrend. And that is the confirmation we need. And this refers to the structure, okay? So when we talk about structure, we are talking about the flow of the market in terms of highs and lows. If the market's continually forming higher highs and higher lows, it's in an uptrend. So when you see that swap to lower lows and lower highs, you know that that is when the opportunity for a trend reversal trade comes around. So the first and most important major key component for trend reversals is identifying the shifts in structure and identifying the areas where the market goes from an uptrend into a downtrend, or from a downtrend into an uptrend by clearing a lower high and turning into a higher high, okay? So this is the first move that we'll see, right? Let's just bring it back to here. This is the first move we'll see, a clear of the higher low to form a new lower low. Now, this is where we know the trend is reversing, and the entry will then be formed if the market can successfully form a lower high, okay? So that is where we get the confirmation and the idea to actually trade a trend reversal. The idea, the opportunity, comes when we form that lower high. So this would be the point at which you want to sell the market, and then you can look to bring it all the way down throughout however far it's now going to trend to the downside, okay? And of course, the flip side is always completely the same. We're simply looking for the area where the market turns from lower lows and lower highs into higher highs and higher lows. When we see that structure break, we can then look for this pullback opportunity here to be the buying point for that trend reversal trade. So what I'm going to do is go over to the live charts and show you a breakdown example of a trend reversal trade, show you where people go wrong and show you where you can actually go right. So for this example, we're going to look at GBP JPY, and we're going to look at a uptrend reversal into a downtrend. Now, first things first, we look for the structure. Okay, we just spoke about that, looking for the higher highs and higher lows in the market. Which way are the impulsive moves going and which way are the corrective moves going? You can clearly see here that we have impulses to the upside, corrections to the downside. So we are in an uptrend. And if you look at these structure lows, you'll see that we are forming higher lows and higher highs. Okay. So a market is never going to be as neat as any examples show, but it's just important to look for those two things. And if you can do that, if you can identify the structure, the impulses and the corrections, and then identify the highs and the lows of the market, that's simply what it takes. Okay. It's quite simple, even though your examples in real chart scenarios are never going to be as neat as that line that we just drew there on the chart. So as you can see, we are forming higher highs and higher lows. So we are in a bullish trend. Now, this is where people begin to go wrong when they're trading reversals. A lot of people will actually look to guess the top and try to catch the top without confirmation, which leads people to actually sell the market on all of these impulsive moves up. Okay. Now, people may use confirmations like bearish engulfing or pin bars or things like that to actually get into a position. Now, a nice example of that would be here. A lot of people will guess at the trend, and when they see a big bearish candle like this, they may think, right, it's time to get into the market. We'll put a stop over here because obviously we have a bearish confirmation at the top of an uptrend. The market should come down from here. But the thing is, the market structure never changed. And that's why it's so important to always consider the highs and lows of the market. Now, until we clear one of the lows, so in this example, until this market had cleared this low here, the previous higher low, until that happens, there's no confirmation to shift direction in the trend. So patience is required, but you're going to see how well this works very, very soon. So just skipping price back to where we were before, you'll notice that, yeah, we are still forming the higher highs and higher lows, so no trend is yet present. Now, we can look towards these higher lows in the market for structure breaks. And if the market manages to push through these levels, we can then realize this as a shift in the overall trend. So currently the high of the market is here. It will either now continue higher in the uptrend or break the previous structure and put us into a downtrend, and that is where the reversal opportunity comes in. So as you'll see, the market has come down. It has cleared the previous structure low. It has cleared all of these previous structure lows as well. Okay, so higher high, higher low, higher high, higher low, higher high. Now we formed a lower low. Now what we've also done is push through this previous structure as well. It's only by a bit, but what this shows us is that the selling pressure is strong in the market now, and these previous structure points are willing to give way. So this is where the trend reversal opportunity really comes in. That's the structure covered. And another thing that I mentioned as well is the importance of the location in the trend. Okay, so what you should really do is look for key levels or supply and demand zones on the higher time frames and see, does this conform with those? Now, as you can see in this example, we have the 141.250 level. We spoke about key levels in the previous video and why those 0, 250s, 500, and 750 levels are so important. If we see a reversal like this, a pinpoint reversal from a key level like that, and then a shift in the structure, that is going to give us some pretty solid confirmation that the trend could then be ready to go to the downside. Okay. Now, when it comes to the entries, we need to have these things down first, the structure and the location in trend, and then we can actually scale in and look at the entry, see what the market is providing to us. Do we have an opportunity to enter? Now, for trend reversals, what I always like to see is a tap back into a supply zone, or if it's the other way around, a demand zone. So we can see here, I'm just going to neaten the chart a little bit. We can see here that the structure has been broken. Now, let me just mark that out for you so that it's there on the chart for reference. We can see the structure has been broken. So we've got a structure break through that level. We've also got a structure break through this one, but this one, of course, is going to allow us to keep it a little bit neater, and that is the first higher low that was broken into lower lows. So what we would then do is look towards supply and demand zones. Now, supply and demand zones are areas of consolidation at the top or bottom of moves of interest, right? So if we head to the 30-minute chart, you'll see we have this consolidation before this move of interest, which is essentially a uninterrupted move in the market where the market has been pushed down with quite a lot of selling pressure. So it's these zones that we like to focus on when the entries are coming about. Now, if we look at this on some lower time frames, you'll see we've retested that zone, and now we've actually formed this bearish engulfing candle. Now, it's up to you what time frames you use. These trend principles do work on every time frame. I believe you could even trade these on the 1-minute chart if that is what you do. Personally, wouldn't recommend it. Higher time frames, higher accuracy. I generally like to use, for my intraday trades, hourly charts and 30-minute charts to find the overall direction of the market. Then I use the 15, 10, and 5-minute charts for entry confirmations, the 10-minute chart being my favorite. It gives you a little bit of a different view to what everyone else is seeing in the market because they're generally not trading the 10-minute chart. So for me, what I would see here is a rollover, tap into the supply zone, bearish pin bar showing we've got a lot of selling pressure, and then a bearish engulfing candle taking up the previous 20 minutes of price action. So we could go ahead and sell the market here. In an instance like this, in a trend reversal trade, we would like to keep the stops over the supply zone or over whatever level it is that gave us the interest to enter. Now, the reason being, we could still push higher into this zone, okay? We do have nice confirmation, but there's nothing stopping this market to actually push a little bit higher. We know, though, that if it does push over this, then the shift is actually invalidated because what do we have? Higher high, equal low, and then we have the lower high and the lower low. So we're looking here to form a new lower high, which means we should not clear this if the trend reversal is valid. Now, if the trend does push back over there, maybe this was a false break, okay? These don't happen too often, but you will see them. No market is 100% set, and no opportunity is 100% accurate as well. So we put our stops over the previous lower high. Now, if you have the opportunity, maybe if you're trading a swing trade, it would be good to put your stop clear of the whole high of the trend. The reason being, you're very, very clear then on a reversal. But if you can clear that previous lower high, basically that means as long as the trend stays valid, you're not going to get stopped out. So I'm going to shift it to the 30-minute chart real quick, and we'll actually plot up a target for this trend reversal and see what we can get in terms of an opportunity. So this is where we now want to find out if we've got a good position, if we have a position with risk reward that is worth taking. Now, for targets, I generally look towards previous areas of supply and demand and key levels as well. So what strikes me most interesting right now, I believe, is the 140 level. So we can see down here, we've got all this demand, broke, retested, obviously a key level that is playing a part in the market. And we've also got this little demand zone down here. So for me, 140 looks like a nice target. Now we will actually monitor on the way down and see if we can potentially swing it out further, or maybe even take some profits early if needed. Now for me, 1.85 risk reward is not the best. I would normally look to take trades with 2.5, 3, 4, 5, 6, or so on risk versus reward ratios on a trade. But for example's sake, it does work. It's still a solid risk reward. If you do trade 1.8 or so, you are going to, have positive results. I mean, you can win one, you can then lose one, and you're still up 0.85%, or whatever it is that you risk times 0.85. So just for example's sake, we will just focus on that because we are just looking at the shift in the trend. Now we can see here quite clearly on the 30-minute chart, we have higher highs, higher lows, higher highs, higher lows, breakthrough, lower low, lower high, and let's see if the market gives us a nice opportunity. So as you can see, the trend reversal comes underway after we form that lower high. Okay, so we use the lower low for confirmation, the lower high for entry, and then we look towards lower targets in trend to actually catch a move down in that reversal. And that is the process of trading trend reversals. So I hope you found that very informative and interesting, and I hope that this has improved your skills on trend reversal trading. Now, a very important note to take from this, if anything, is that you need to focus on the structure. If you're the person I was talking about before, who's chasing the trend reversal and selling every big bearish candle that we get, for example, this one here and this one here, I know a lot of people do this. If you do, it's fine because we all make mistakes and we all have a path to travel down to actually reach the successful trading in the market. But what you can now do is take this new knowledge of market structure away and realize, okay, I'm selling too early. I'm not waiting for confirmation. I'm not waiting for the market to actually shift its direction before taking my opportunities. And that's what you need to do if you want to improve your trend reversal trading accuracy and actually catch valid reversals in the trend. So thank you for watching. I'll see you in another educational video. I will be bringing these out at least once a week from now on. And if you enjoyed it, please like, please subscribe. If you want to learn how to trade, please head over to that link in the description and you can enroll in my online trading course or sign up to trade day to day with my community. So thanks for watching and I'll catch you in the next video.